Well, welcome to Farmers.com Risk Management Daily Bottom Line for April 2nd, 2015. I'm Mark Lottie, and today we are going to look at the weekly grain export numbers. Before I get into that, tomorrow, Friday, April 3rd, is a holiday. Markets will be closed, so there will be no daily tomorrow, as well as Monday. There will be no daily, and we will be resuming on Tuesday, April 7th. And we do have a new feed recommendation alert as of today. So the U.S. livestock producer, we feel you should book physically up to 100% of your feed needs until the end of August or September of 2015 for both corn and soybean meal. If your basis is positive, then perhaps consider hedging in the event of rising feed costs, prices by buying or going long futures or options. Canadian livestock producers, higher Canadian dollar has made feed more expensive in Canada as your basis has widened. The risk is in the second quarter is the rising Canadian dollar, which will lower feed prices, but an increasing feed or futures price in the U.S. could more than offset that. Therefore, we're recommending that you hedge with long futures or options in the event that prices do rise in the coming 3 to 5 months. So the bottom line, bearish USDA March quarterly grain stocks and planting report sent corn futures tumbling to reset the lows, support of about $3.75 a bushel. The USDA found about 145 million more bushels for 14-15 marketing year. This is the opportunity to book both your feed needs forward, corn and soybean meal, to the end of the summer. As far as even as September, corn is at the lower end of its trading range in the past 6 months. Soybean meal prices, or hedge the long futures or call options, either July or September futures. The risk in the coming quarter is that feed prices could rise, not fall, particularly with funds at near record short positions. So moving into the weekly exports. Corn exports came in at 406,000 metric tons for 15-16, and then that was for 14-15, and then for 15-16 came in at 25,000. Expected was at 400 to 700,000 metric tons, so we're kind of right in line with those expectations. Cumulated exports now sit at just over almost 22.5 million. That's down slightly from last year. 14-15 corn export sales remain above the USDA's estimate for 15-16 are lagging poorly behind, as U.S. corn is too expensive around the globe. Soybean export sales came in at 27,000 metric tons for 14-15 and 568,000 metric tons for 15-16. Expected was at 150 to 400,000, so we're above expectations on that. Accumulated exports now sit at almost 44 million metric tons. That is up from last year's just over 40. So 14-15 U.S. soybean export sales have dipped below the USDA estimates for the first time in a while, as USDA or the U.S. soybean export programs are winding down. And then wheat export sales came in at 160,000 metric tons for 14-15, 131,000 metric tons for 15-16. Expected was 150 to 450, so we're right in expectations as well for wheat. Accumulated exports were reported at 18.5 million. That is down from last year's almost 25 million at this time. And again, 14-15 wheat export sales still remain below USDA estimates. So the bottom line, great export sales were fairly neutral overall, except for the soybean markets, where exports were better than expected. However, the trade is concerned with the pace of oil crop sales. Also get used to the reduced pace as more Chinese business heads south to Brazil with their soybeans almost $1 a bushel cheaper by some estimates. April 1st wasn't just April Fool's Day, it was also the start of the second quarter, and it comes with fund allocations, fund buying seemed to be the story of the day yesterday, with the first of the month and the first day of the quarter. Fund positioning was favoring the broad commodity markets, and it continues into today. There appear to be some liquidation in the stock market, longs yesterday and buying of commodities. So there's no change in our near-term outlook for higher prices, despite the USDA reports that were kind of disappointing this week. Dry weather in the U.S. Midwest and Plains is taking the center stage. So if we do not get the proper moisture in a month of April, watch out as the funds start to cover near record short positions and drive these prices higher. So again, marketing recommendation, which is our feed recommendation, have a look at that in the bottom line. And that is all for today. Until next time, thanks for watching.